Hey everybody, it's Chuck Barone, Wednesday, October the 9th, 2024. I hope you'll forgive my casual attire today. Guys, don't ever, if you're young, try and stay young forever. The best advice I can give you. Doing a little bit of a workout this morning, doing some inverted rows, and I just heard this little tweak, and now my back is like, ah. So anyway, we're going to suck it up and do this show, but I hope you like the hat. This was a funny one. A friend of mine gave this to me. And we're in a happy mood today, even though we got some serious back pain. Anyway, interesting chat today with Dave and Molly before the show. He's down in Melbourne, Florida, so he's given us a little bit of an idea of what in the hell's going on down there. Guys, be super careful. It sounds like you're in pretty good shape, Dave. It sounds like, you're not one of those Floridians who's like, what? We could get hit with a hurricane? You sound like you're super prepared for it. Be safe nonetheless, my friend, and best of luck, man. All right. Well, before I get rolling, let me take a half a second. Welcome everybody to the show. And as always, thank everybody for their support. I appreciate everybody being here. I appreciate everybody on the chat. You guys keep the show rolling, man. We appreciate it. All right. Let's talk about markets today. Well, you saw what happened, right? Stock market just blasting off. I think that, this market's just so friggin' stupid right now. But the funny thing is, we're all talking on this show. I do this show pretty much every day. And it seems like a lot of the talk on the show is about what's wrong and what's not going well. But look at these numbers, guys. Look what happened today. So the stock market rips higher. The Dow up 431 points, 42,512. Brand new record for the Dow Jones Industrials. The NASDAQ up 108 today, 18,291 on the NASDAQ. If there wasn't all this fun happening right now with Google and the Department of Justice, it would have been higher and probably broke a record as well. The S&P up 40 points, 5,792, a brand new record for the S&P 500. So let's say, guys, we can grumble and bitch and complain nonstop about how terrible everything is. But if we're investors, if our job is to invest money, we're getting our ass kicked, man. These markets, everything breaking friggin' records, guys. It's crazy. So I guess, we're kind of looking at the half empty part of the glass, right? The market tends to be looking more at the half full, maybe even 3/4 full, which we're seeing half empty. Stock market just on a freaking tear. The S&P 500 now is up higher than 20% so far this year. You know how hard that is for the S&P 500 to do? That's 500 stocks in an index, guys. An incredible year for the stock market. So I add the caveat so far. The bond market, not much happening there. Bonds selling up again. Yields continuing to rise, which is crazy because mortgage rates and yields have actually gone up since the Fed cut rates. Now, I know I was not expecting that. We saw rates react. They were kind of getting in front of it a little bit, right? So maybe we expected rates to come up a little bit higher on these treasuries because they didn't get, they're not going to get these multiple giant cuts they're hoping for. But the bond market looks like crap, guys. The 10-year rises 4 basis points, 4.07%, 4.07% on the 10-year. The 2-year also up 4 basis points, 4.02%. So they're narrowing out again. Both now, you got the 2-year now above 4. This is not good. This is not a good sign, guys. If the bond market was really confident that everything in this economy was well in hand, these rates would not be spiking like this. Now, part of it is these markets pricing in these Fed rate cuts because the market was super bullish about huge rate cuts coming even next month in November. And now the markets, after the jobs report, the report that basically changed everything, the market now refining what they think is going to happen. And the chances for no cut in November have spiked higher than anything else. So interesting times. But the bond market, I guess, if you're an investor, you're looking for income, you could do worse than getting a 4% 2-year treasury. It's absolutely 100% safe. You lock your rate in for 2 years. It's significantly higher than what they're giving you in a savings account or even a money market right now. Money market's tanking out, and as long as rates don't spike much higher, it's a pretty safe bet. And right now, there's really very little evidence that rates are going to rise. So anyway, interesting. The dollar today, and the market really taking hold of these no rate cut scenario, the dollar rallies 40 basis points. The dollar now at 102.89, pushing back at 103. Super strong dollar. I'm sure the Fed doesn't hate a strong dollar, but the dollar rising like this sure is contrary to rate cuts. It's crazy. They cut rates and the dollar got stronger. They cut rates to start. It's nuts. Gold and silver today down a little bit. Not terrible days though. Gold down $13.50. $2,608.70 for an ounce of gold. And it's getting a little too close to $2,600 for the way I like things. Silver falls down 16 cents. $30.48 for an ounce of silver. So both of those, gold and silver, hanging on to support numbers. I'd like to see a little bit of a rally in silver. It's been barely, once it broke through 30, it kind of tanked back down before. Now it broke back down up through again and looked like it was really consolidating well. Now it's back pushing back down at 30. We'll see where we end up. Oil today, well, oil falls 33 cents per barrel. $73.24 for a barrel of West Texas Intermediate, exactly where we expect it to be. As long as the Middle East is quiet, I think the bias in oil is down. Bitcoin today takes a little bit of a hit. Bitcoin down $1,782, 60,627. So like silver, Bitcoin now clinging to that support number just above 60,000. So we're going to keep an eye on both of these as we have. Now, this is just technical charting, okay? This is not like a in-depth analysis of silver or Bitcoin, okay? I just kind of know from tons of experience that these round numbers tend to be support and resistance. And it seems like we've been hanging around with both of these, silver and Bitcoin, at these support resistance numbers for a long time. So we'll see where it all plays out. All right, let's move on. Let's talk about news today. A lot of interesting things today. How many of you guys saw this Department of Justice thing? And they've had it with Google, guys. They are going after Google hard with their antitrust. So now they're in their sights, let's face it, talking about asking a judge in this antitrust thing to force Google to divest itself of huge parts of its business, guys. I mean, basically what they're doing is looking to break Google up like they did Ma Bell, like they did Standard Oil and so many others in the past, right? What they're talking about is forcing Google to divest itself of Chrome. Well, that's a huge piece of their search engine monopoly, right? And they also want to make them divest themselves of their Android systems, which is another huge piece of their business. So very interesting doings here. I don't know if the Department of Justice will be able to get all of that, depending on where it is and who the judges are and all that fun stuff. But the Department of Justice is claiming that Google has monopoly power on a search engine. They're forcing others out of business, buying out their competition. So now they're going to try and break that up. Now, I really think that the government tends to be late to these things, right? I think now with a lot of new tools coming, I used to use Google all the time to search. Now it's more OpenAI, ChatGPT. I use that more to search than I do Google. So I think the Department of Justice might be a little bit late on this, But this was a big part of the reason the NASDAQ lagged the Dow and the S&P today, didn't break a record on its own. Now, it's going to be interesting to watch how this antitrust case goes, because we have a couple of big examples that have already happened in the past. And will it be more like the breakup of the Bell systems in the 80s, where basically Ma Bell had a complete monopoly on the local landline business in this country? And they broke that up. The Department of Justice came in, broke it up, and truthfully, they ended the Bell system. They've broken all up into different Bells and then AT&T, and it still kind of exists, but it's nowhere near the monopoly it once was. The big comparison there, because that was one where the Department of Justice did actually destroy the monopoly. The contrast to that is the Standard Oil story. This goes back some years. This was like, I think, around early 1900s, I want to say. The government went after Rockefeller and Standard Oil, forced the company into a breakup, but the way they did it, it just made everybody at Standard even richer. Because they didn't actually break the company up. They became Standard Oil of New Jersey, Standard Oil of Indiana, they were separate, but they were all still Standard. So it was a completely different thing. And all they did was take Standard Oil stock, tank it, but they created all these other stocks, and they just got richer and richer and richer. So it'll be interesting to see the way the Department of Justice plays this one out with Google. The Fed minutes, man, it took a little bit of time going through those today. Very interesting stuff. There was a big consensus before the rate cut that the Fed was pretty much all on the same page. We needed a pretty big boost. They were worried about the economy. We had a couple of weak jobs reports in a row, where both were revised higher, astonishingly. We all believed there was big consensus. Well, it turns out that's not exactly true. It shows there was pretty strong discussion over the size of the rate cut. Were we going to do a half? Are we going to do a quarter? Only Bowman voted no. But many more would have been, a lot of the governors would have been satisfied if they would have just raised the rate, or cut the rate, would have been satisfied if they would have just cut the rate a quarter. Now, there was no sweeping consensus that a big hike was necessary, like back in 2008, where the Fed panicked and couldn't wait to start chopping. This news made traders happy today. That's why you saw these big rallies. Because what happened was, traders were concerned that Fed cutting a half signaled the Fed saw something in the economy or knew something about the economy that we didn't know. And they were trying to get ahead of it to rally the economy from recession. But now this shows it wasn't exactly so, right? Unless they're lying their asses off on their minutes. So it alleviated the fears there that the Fed was basically scared shitless for the economy. And it's interesting that the markets are showing today a 20% chance of no rate cut at all in November. Now that's up from 0 last week. Okay, so tomorrow's CPI is going to be the determiner. I think if the CPI number comes in hot, you have a much better chance of at least a quarter, maybe a half. I doubt they're going to do another half. That would almost be inflationary, right? If the number comes in soft, inflation being tamped down even more, let's say the top line number comes in below 2%, they're expecting 2.2. Let's see. It's going to be fascinating. What's interesting to me about this CPI today is that the top line number is at 2.3. The core number, now core takes out energy and food, which are the volatile ones, right? But the core number is sitting at 3.2, basically a whole percentage point higher than the top line number. Now, ordinarily, the core numbers are lower than the top line number because the top line number includes the volatile food and energy stuff. So it looks a little bit weird that looks a little bit weird to me. So let's do a little bit of research and dig around and see what in the hell does that actually mean? Because it's not normally like that. Okay, and that's for sure. All right, a couple quick ones before we get going today. Earnings coming Friday. That'll be as big a play with the Fed because it's bank earnings. That'll be as big a play with the Fed as the CPI number will be. We're also going to get a ton more data, PPI and a whole bunch of other stuff finishing this week out extra strong. But we'll get Wells Fargo and we'll get BlackRock and Wells Fargo earnings out early Friday. So if those numbers come in strong and banks are looking good, well, I think that might rain on the rate cut parade too. Now, it's funny how the market's just whipsawing all over the place. The market was pretty much convinced that we were going to get another half in November. 87%, I want to say, percent probability was priced in. That's in the tank now. Most consensus, a quarter point cut and a growing number on no cut at all. It's going to be crazy, guys. All right, China. China comes out with their stim. They make a big announcement, the big parading of government people. Market falls 7%. I guess they didn't buy their story, right? So China really in some deep doo-doo, guys. Their economy, they're looking at a scenario where they could actually be in a pretty significant deflationary situation. Governments hate deflation because everybody's assets, everything goes down, and it feeds upon itself because let's say you're shopping for a lawnmower, and the lawnmower is $400, just using made up numbers. Now, in a deflationary situation, you're not going to buy that $400 lawnmower because you got to be figuring that you can get it for $350 in a week or two, or 4, or whatever. So that's what deflation does. It discourages people from spending money. And it just feeds upon itself then as, businesses desperate to sell, continue to cut prices. And it's just a very, very destructive phase. We've seen what happened with Japan. They're barely out of it now. They're still really not out of it. And it looks like our friends in China, I say that facetiously, guys, are probably aiming themselves for a repeat of that disaster that Japan went through. CPI, good report likely means no cut in November. So let's say CPI comes in lower than 2. Let's say they bring down that friggin' core number. Well, I would say, now you guys know I've been kind of bearish on these rate cuts all along anyway, but I would say that really strengthens the idea that we don't need any more rate cuts. Inflation's strong, or inflation's beat down in under the 2% number, if that can get it there. Employment's still decent. Obviously, earnings are doing well. It's just the craziest times I've ever seen. When you have the stock market at record highs, and you have gold and silver both up more than 30% for the year, that doesn't happen very often, man. It's just the craziest times I've ever seen, guys. All right, GDP now. Listen to this. That's a Atlanta Fed Bank tracker. GDP now says third quarter GDP plus 3.2%. Holy crap. So now these are the numbers we're getting. Take them with a grain of salt. But the economy growing, stock market at record highs, companies earning. That's why we're going to be looking at those bank earnings on Friday. Employment solid. Maybe we need to be a little less grouchy about things, guys. I don't know. I'm in real estate, so my view of things is a little perverted by the disaster that residential real estate is, but crazy. Let me just finish it up with a Florida insurance story. I was talking with Dave and Molly about that. What's interesting is my brother-in-law, he's the coroner for, I believe it's Monroe County down in South Florida. It covers the very bottom of Florida. It's just below Dade County, and it covers the Keys. He's the coroner for that county. And he has a really nice house down there. And I was prodding my wife to ask him about his homeowner's insurance, because I've been reading so much stuff and talking about it on this show. So he told me that he was lucky. His homeowner's insurance is only $1,000 per month. And I was like, holy shit. Wow, that's bigger than a lot of people's mortgages. But here's the kicker, guys. To get his insurance costs down to $1,000 per month, he has a $60,000 deductible. Oh, I was reading about a guy in LA wants to buy an $8 million house in LA, and the insurance company is quoting him $140,000 a year for homeowners for that house. This is a crisis coming, guys. Homeowners insurance is in deep, 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 deep doo-doo, and it seems like it's only going to get worse. Anyway, to all my friends in Florida, Dave and Molly, please, guys, be super, super, super careful. Don't, play it safe any way you possibly can. Hunker down, man. I'll be looking for your comment tomorrow morning, Dave, or tomorrow during the show. Make sure you keep it safe there, buddy. All right, everybody else, take care. Back tomorrow. Tomorrow's CPI day. It's going to be a good one, everybody. Have a great evening. Baseball, Yankees, 4 o'clock. Everybody take care. We'll see you tomorrow. Thanks.